But I do want to address what Jamie Dimon had to say about what would be maybe the next financial crisis. He doesn't expect it to be like the great financial crisis in '08. He talked about geopolitics. That's one of the big risks in the market.
I think it's certainly a risk. And what makes it a big risk for the market is because it's very difficult to position or to anticipate. So it creates almost a bit of a randomness. And so getting ahead of that risk means that you have to be mindful of how you're positioned for many different scenarios. And that's where, diversification, all of the sort of golden rules of investing really come into play to prepare for that event before you have visibility on that event.
I don't understand though, because the U.S. bombed Iran last year. Russia's invasion of Ukraine continued. There was the escalation of tensions in the Middle East, and the S&P 500, if you were to, go to sleep in January of 2025 and wake up December 31st, you were up, close to 20% on the year. Here we are. President Maduro was taken in the middle of the night by U.S. forces and brought to the United States. There's talk of involvement in Iran now. There's talk of taking over Greenland by the United States, and markets aren't really reacting. So how is geopolitics a risk?
Well, first of all, I do think that has been a bit of a surprise for investors to see that the market is not really reflecting the increased potential for geopolitical risk. So I would say, myself included, I've been a little bit surprised at the strength in markets coming into the year. So then we have to question, why is that? What is really driving the market? And I think the reality is what's driving the market is the prospect for greater earnings. And that does tend to be the most important driver for medium to long-term performance. Geopolitical can create short-term risk and short-term volatility, but what the market is really trading on right now is the prospect that we have strong tailwinds from monetary policy, fiscal policy, and a productivity boom that is pretty much fueled by the use of artificial intelligence in businesses across multiple sectors. So it's an earnings story that is really driving the outlook and the price behavior that we've seen year to date.
Totally get that, right? And we're going to be watching the earnings this season, right? What the CEOs have to say, what their forecasts are for the year. Having said that, are there certain geographical or geopolitical plays beyond that, whether it's Canada, whether it's Europe, right, which has been building up defense, building up some of their industries? I mean, as everybody kind of looks inward, is there certain plays that you think might be out there for investors?
Mm-hmm. Well, I'm sure you've heard from lots of guests about the prospect of broadening out this market rally, which had been primarily technology driven. And we are certainly in that camp. In that sense, we also see that broadening out expanding across geographies, because the U.S. is primarily a stock market that is driven by technology and the consumer. But when you think about the prospect for other sectors like materials, financials, defense, some of the more value-oriented sectors, the bigger plays in those sectors are, as you pointed out, in other parts of the world, most notably Canada in the materials sector, and defense and financials in Europe. So there are lots of opportunities in other parts of the world, and investors have been rewarded by focusing in an outsized way on U.S. equities for many years now. But what we saw in 2025, and we expect that to continue in 2026, is leadership to come from other areas of the world. And I'll take that back to my point around earnings. Guess what? 2026, the biggest earnings growth that we're expecting is coming from emerging markets first and Canada second.
Wow.
So investors really do need to think more broadly.
Hey, just got 30 seconds here, and I think we'd be remiss if we didn't ask you about the energy story, the Bloomberg exclusive about President Trump pushing for emergency power auction to support the AI boom and have technology companies be participants and help pay for all of this. Just quickly, again, about 25 seconds. Is there an investment play that you think? Because stocks, depending on the names, some are up a few, but a lot are down today. Just quickly.
Well, I think that the most important part is actually the macro in that. It's the fact that technology plays are continuing to become more capital intensive. They have very high multiples because of the high free cash flow and the lower capital intensity. As that shifts, those multiples will come down. And that, again, increases the thesis around broadening out across markets.